Well, good evening, traders. This is the FX Big Dog, and welcome to the market update. If you have any questions regarding this review, please email me at analysis@infinitumfx.com. Click on, or perhaps you can click on to the helpline link on our website for the live chat, live private chat. Don't forget, traders, that you can follow me on Twitter. Just search the name FX Big Dog or Infinitum FX on the Twitter webpage. Please, traders, note that trading the forex markets is risky and is only intended for investors that can afford the risk. This video presentation is for educational purposes and not offering trade recommendations. If you choose to follow a trade presented in the video, it will be, of course, at your own risk, of which we do not accept the accountability for your actions. We are, of course, of the understanding that all traders have the full understanding of the risk and are responsible traders. Please do not trade a live account unless you have traded a successful strategy on a demo account for some time. Alright, traders, without further ado, let's get started. Now we are going to just look at the Great British Pound today, and the Great British Pound, of course, is offering us some great opportunities. And let's go take a look and see what has developed in the last 24 hours. As you can see, we are showing a 60-minute time frame, but let's move to the daily first, see how the daily closed out. Well, double bottoms. Now, something we need to make note of is that it's closed out with double bottoms, but not at support. Support was at 62.76, so it's double bottoms. Doesn't necessarily mean the market's now going to be rallying up too far up, but of course there is going to be some temporary bullish movement. Alright, now the temporary bullish movement could just of course offer us opportunity to get in again at a higher point and sell the market short. How do we do that? Well, let's take a look and see what's happening on the smaller time frames. But before I go down to the smaller time frame, just a note on the daily. We can see that the daily showing an intermediate up AB swing. This is what the market is looking for, deeper retracement of the daily swing. The market did test the 382 bounce before it took off and broke out the B high, but of course came back inside the B high, trading back inside the AB boundary. We're looking for, of course, a deeper territory pullback of this upswing, and that could be maybe a retest of the 382 bounce, or perhaps it's chasing after the 618 down here at 52.55. That, of course, will be in the next coming weeks or so. But for now, let's go ahead and look at the 240. We can see that the 240 is in down AB swings on the short term. Now let's get a bit of understanding on what we're seeing right here. We can see the intermediate swing is bullish, right? So we are in a bullish up AB boundary of the intermediate swing. But we do have these short-term swings showing bearish. Now, what does it mean? It means that we are still in retracement of the intermediate swing. So the short-term trends are trends that we can certainly trade, okay, but we do understand that the market's still overall bullish, but we're trading a retracement of this bullish up AB swing. Now the retracement showing on these short-term swings is showing that it's pulled back to a 382 bounce of this swing. Market broke below the B low, came back inside the range, tried to retest the 382 bounce again, but then did break short again, and we're chasing after 60.53. That'll be the de-extension of this swing, and let me go ahead and just enlarge the charts to about that point where you can now see the next swing that we have. The next short-term swing is showing it right here. You have 66.23 is the high, and we have the low at 61.58. Now remember, traders, because the market has not pulled back to a 382 bounce, I like to go and extend my B low, and I'm going to go ahead and do that. And the B low is now at 61.56. So there it is. 61.56 is the B low. You can also see that the 382 bounce is now at 63.34. Not a big change out of those I'm extending to the B low, but now I have a more significant not significant B low, but I've got a more prominent B low based on the fact that the market did not pull back to a 382 bounce, did take out the previous low. It did not trade below it too long before it came back inside the range. You can see there was a bullish candle formation that formed right there at that old support. We have double bottoms falling right now, the 240. Now look at that, new down AB swing, market showing that it could pull back to a 382 bounce. Well, it's still there's a little bit of room still, but if we close out with an evening star, my guess is that it's chasing now after now the B low once again, and then of course the D extension. Firstly, this one here at 60.53, and then of course this one at 58.60. Let's move on to the 60-minute time frame and see what we can pick up on the 60. Well, we've already had a bearish candle formation form on the 60, but look what it engulfed. It engulfed a doji, almost a doji. It was actually a spinning top. So that's not really too much to shout about. But if we close out deeper, which I'm expecting, of course, a retest of this trend line, we could have an evening star by 2 o'clock this morning. Well, 2 o'clock next morning, and that'll be 2 o'clock a.m. Eastern Standard Time. We could close out on the 240 with a bearish evening star, but we'll have to wait and see. This thing's got a couple of hours before 2 o'clock. In fact, we've got about 3 hours left before 2 o'clock. And before 2 o'clock, you can see that we've got some room for the market maybe to bounce back down and retest the backside of this trend line, give us a goodbye kiss. Now, my goodbye kiss means that it basically hits the trend line like this. Okay, let me not extend my... Hits the trend line and then takes off again towards the D extension, which is here at 63.95. Now, we've got conversions here at the 618 bounce of the short-term swing and the 382 bounce. So we've got a confluence area that could indicate that 63.36 might just hold on this 60-minute time frame. So let's just wait and see what develops in the next couple of hours. Couple of things you need to watch out for, and one of the things is, of course, bearish candle formation forming on the 240, and of course the 60-minute time frame hold below this trend line. If it does hold below this trend line with a bearish candle formation on the 240, it might inspire some selling opportunity for some traders. Those traders that took the advantage of that bullish move, those scalpers that took advantage of this bullish move going north, there was approximately about 150 pip move on that. I indicated in my previous video. If you want to go back to the previous video, and you'll see I said that there's great opportunity for scalpers to scalp the market going north. Alright traders, well that's the setup for the Asian session as we head towards the European session. I trust that the information provided today helps you make better informed decisions and makes you become a better trader. This is the FX Big Dog wishing you joy, peace and successful trading.